Hello, I'm Regina McCann-Hess, President of Forge Wealth Management, and welcome to our Women in Wealth series. And welcome to 2022, a new year, right? We get another chance at this. So since it's 2022, we're going to take this opportunity to talk about the 2022 Outlook. LPL Research puts out this report every year, and this year it's called Passing the Baton. And just obviously just talks about what they think is going to happen in 2022. So first, we'll start off with the economy. The U.S. economy bounced back from its worst year since the Great Depression in 2020, with one of the best years of growth in nearly 40 years. Now, a combination of record stimulus, a healthy consumer, an accommodative Fed Reserve, vaccinations, and reopenings of businesses all contributed to a big year in 2021. Now, in what amounted to the shortest recession on record, only 2 months in March and April of 2020, the economy came roaring back to produce what is currently expected to be over a 5% gross domestic product growth in 2021, more than making up for the 3.4% drop in GDP in 2020. Now, as the U.S. economy moves more to mid-cycle, our 2022 forecast is for 4 to 4.5% gross domestic product growth in 2022. Fiscal and monetary policies played big roles in the economic recovery in 2021, but we see 2022 playing out as a handoff from stimulus bridging a pandemic recovery to an economy growing firmly on its own, with consumers, productivity, small business, and capital investments all playing a part in the next stage of economic growth. Now, as we move past COVID-19 globally, Europe and Japan could be ripe for potentially better economic growth in 2022. However, emerging market economies may disappoint. Now, how about that stock market, right? LPL Research expects a solid economic and earnings growth in 2022 to help U.S. stocks deliver additional gains in this year. Now, if we are approaching or already in the middle of an economic cycle with at least a few more years left, which is LPL's view, then LPL Research believes the chances of another good year for stocks in 2022 are quite high. Now, a double-digit percentage increase in the S&P 500 earnings per share in 2022 is possible, but COVID-19 related supply chain issues combined with materials and labor shortages could lead to higher costs and constrained profit margins. So we favor US over developed international. We also favor value over growth and cyclical sectors like financials and real estate over defensives like utilities and consumer staples. Now let's talk about bonds. We do expect interest rates to move modestly higher in 2022 based on near-term inflation expectations above historical trends and improving growth expectations once the impact of COVID-19 Delta variant recedes. Our year-end 2022 forecast for the 10-year Treasury yield is 1.75 to 2.00. Now, just for matter of reference, at the end of 2021, the 10-year was about 1.51. So you also have to keep in mind, though, an aging global demographic that needs income, higher global debt levels, and an ongoing bull market in equities may keep interest rates from going much higher over the next year. Nonetheless, with starting yields still low by historical standards, bond returns are likely to be flat to the low single digits in 2022. Now, with credit spreads as low as they've been in years, we mean neutral on investment grade corporate credit. We think equities continue to offer better return potential than high yield bonds, while bank loans may make sense for appropriate income-oriented investors willing to take on more risk. Let's talk about inflation. Boy, oh boy, did we see inflation in 2021. Definitely 2021 was the year nearly everything was in shortage, and it all translated to added inflationary pressures. Record numbers of ships waiting at ports, a lack of materials, unfulfilled job openings, higher commodity prices, and a myriad of supply chain disruptions have added to price pressures. Now, while we believe these pressures will steadily decrease over the next year, and we will eventually settle back to a 2.5% inflation, it will likely be a gradual process. Still, supply chains may take a year or two to be fully addressed, depending on the product and the scale of the problem. Now, despite challenges around supply chains, hiring, and prices, if the demand is there, it should help drive continued improvement as businesses adapt to address these challenges. That is likely to leave us with a positive economic backdrop for at least 2022. How about we switch to commodities? One of the more surprising things about 2021 was that it saw both commodities and the US dollar advance significantly. Now, we don't expect the same dynamic to continue into 2022. We do remain positive on industrial metals like copper and expect continued gains there. However, our precious metals view is neutral, and we see limited near-term upside for oil prices after such a strong rally, along with rising risk of increased supply. Alternative investments. Now, with bond yields low and prospects of modestly rising rates, it may be an appropriate time to check back in with alternative investments, especially those that have historically acted as a way to diversify interest rate related fixed income risk without simply acting like stocks. Now, these strategies include global macro, multi-strategy, equity market neutral, and our preferred solution, event-driven. Now, remember, I took this information today from the LPL Financial Outlook 2022, titled Passing the Baton. So if you're a client, we've already sent you a copy of this report. If you're not a client, please reach out to us if you would like to receive a copy. And with that, I want to thank you again. I'm Regina McCann-Hess, President of Forge Wealth Management. You can find us at forgewealth.com. Our social media is Facebook, Twitter, and YouTube at Forge Wealth, and on LinkedIn, Regina McCann-Hess. Hey, have a great year, make it a healthy year, and do the best you can out there. Thank you.